I'm Tyler Cobble. I've been in commercial real estate for 12 years now. I've bought over $65 million worth of real estate for myself and helped hundreds of others buy way more than that. Due diligence is hands down the biggest part of the process that I see new investors mess up. That's why it's so important that you pay attention and get this part of the process right on the front end. This is a talk that I gave at the best ever conference on the due diligence process for commercial real estate. So pay attention, and I'll give you a deal analysis toolkit at the end of the video as well so that you can make sure that you're doing this the right way. Let's dive in.
So we'll be diving into an introduction on due diligence, kind of what it is, the 8 key steps of due diligence. We also call it DD. So if you hear me say DD throughout, that's what I mean. And then I'm going to give you some tools and resources at the end. So what is due diligence in commercial real estate? It's just all the feasibility that you're going to do on a deal to make sure that it's worth buying, to make sure that your assumptions are correct, to make sure that you're mitigating any of the risks. It's critical, no matter what side of the commercial real estate aisle that you're on, that you're doing this. So the due diligence process in commercial real estate is very different from residential and from multifamily. There are a lot of gotchas that you can fall into that you may not necessarily think if you've been investing in different types of commercial real estate. And so that's what we're going to be covering today. Organizing the files, that's a big one. Exploring all financing options. You do have a bunch of different ones, especially if you're coming from multifamily, like Fannie and Freddie is kind of the go-to, right? But there's a handful of other ones in commercial. You're going to want to review the operations. We'll talk about that. We're going to talk about inspecting the property and who you should have on your team, bringing in site consultants, depending on what type of project you're doing, engaging with an architect and an engineer, settling the legal issues. That can be a big gotcha. And then, of course, closing the deal. All right, organizing the files. So title, report, and survey, very important, right? In commercial real estate, you always, I always recommend, at least, and I'm sure your attorney will probably also always recommend, going and getting an ALTA survey, right? An ALTA survey is a survey that's going to be compared to the title work on the property, right? Because a normal boundary survey just really isn't going to cut it when it comes to commercial, especially if you're getting a bank loan. Lenders really want to make sure, since this is typically a higher dollar transaction, right? And commercial properties trade hands all the time. Things just get a little bit messier than in single family, right? I mean, if you're buying a house in a neighborhood, chances are pretty good it's been a house in that neighborhood for quite some time. The property lines probably haven't changed. You really need to dig into that. Your title attorney, your real estate attorney will be looking into that on your behalf, but make sure that you're looking through those documents and understanding what they're saying, right? Current leases and rent roll. Commercial real estate, just like multifamily, is very much based on the income that the property produces or the potential for that income, right? So it's critical that you look into the current rent roll and compare it to the leases. And does anybody know what an estoppel is? An estoppel is basically a tenant confirming that the lease that the landlord has given you is in fact their lease. You would be amazed at how many times, I've even had it happen to me before, because the tenant showed up with a new page after closing, and I was like, well, this is fun. Didn't completely change the deal, but made me responsible for the roof, and it was a bad roof. So anyway, so estoppels will help generally prevent that, right? Income and expense statements for the last 3 to 5 years. Typically, a seller is not going to share this with you until you go under contract. To me, it's a big red flag if they're not willing to share that. I want to go through historical financials because it's going to help you understand, are their operating expenses really high, or are they just mismanaging their money, right? Have they actually been spending money on buying new HVAC units, or are they spending a lot of money just repairing the broken ones, right? That'll help you better understand, can you increase the net operating income on this asset a little bit more? So dig into those financials. Environmental reports, phases 1 and 2. I will include like a phase 2.5. I've had to do a phase 2.5 before, which was not fun. A phase 1 environmental report is basically a desk search, right? So you'll hire an environmental engineer. They'll go out and they'll look through the history of the property and the properties around it and do, whatever magic these environmental guys are doing. And they'll say, there's probably gas tanks under the ground or there's not, right? Depending on what that phase 1 says, you may or may not have to do a phase 2. Nobody wants to do a phase 2. A phase 1 is like $3,000, $4,000, maybe $5,000. A phase 2, the last one I did was like $40,000 or $50,000. It's a little bit different because a phase 2 means that they are actually getting out on site and core drilling. So they're going to have to drill in enough spots on your site and go down deep enough until they don't get whatever they're finding, right? Property condition report, this is also called a PCA, or a property condition assessment. You can get, some of these same like environmental engineers will also do a property conditions assessment, right? I work with, Terracon, I think they're mostly all over the country, but groups like that, you can look up Terracon. If they're not in your area, I'm sure one of their competitors will pop up. But they typically will do the phase 1 environmental and a property conditions assessment for me. It's basically an inspection report on the commercial side. These are like 90 to 120 page reports. They're pretty in depth. Typically, I will just grab the engineer and say, right off the bat, what are the things that stand out to you, so that I know whether or not I need to really spend time digging into this or not. Because I'm also walking the site with my roofer, with my property management team and my maintenance tech. I've got a contractor. So I don't necessarily need to look at that unless there's a problem. And then there's going to be a whole bunch of information in there on that. An appraisal and a broker's opinion of value. Similar things, but a little bit different, right? The lender is typically going to order the appraisal. You can go and get an appraisal, but very similar to multifamily. If you get it, it doesn't count. Nobody cares. You wasted money. The bank's going to order their own, right? They want to make sure that there's kind of an arm's length transaction there, right? Because we know how we can all be. Whenever I know that there's an appraiser going to be at my property, I'm showing up with comps. Hey, man, you seen these? These are pretty good, aren't they? It works 9 times out of 10. If you guys aren't doing that, like show up when the appraiser's going to be there. It's great. Broker opinions of value. Those, they can be good. It completely depends, right? I mean, as a broker myself, well, I don't broker anymore, but I used to be. I'm the first one to say that, man, brokers can be really hit or miss, right? Really, really hit or miss. They can either be really good or really bad. They can know what they're doing, or they may not spend any time on this, or they may spend a bunch of time on it. It just completely depends on your relationship with them. So typically what I say is network with commercial real estate brokers, build that relationship long before you need it. Because by the time that you actually need something like that, it may not be worth it. Do you need a broker's opinion of value on every single property that you do? Probably not, but it's never really a bad thing to be able to show an investor, hey, we're buying this for $5 million. It's broker's opinion of value is 7, right? It helps your investors understand what you're looking at. A zoning verification letter. There are so many times where you will look at a property and on your local tax maps in your tax assessor's office, it will say one zoning, and it's wrong. And that matters quite a bit in commercial real estate because you are actually buying what that property is capable of doing. The same exact building with the same exact tenant, with the same exact lease structure on 2 different zonings will go for 2 wildly different values. You're probably thinking, well, Tyler, I'm buying it on a cap rate. Why does it matter? It's the future potential of that property. If I can tear that building down when that tenant's lease runs out in 5 years and build a 12-story apartment complex, I'm going to pay a little bit more for that property than I will if it has to say single story for the rest of its life. Speaking of organizing your files, this is how I organize mine. Y'all are more than welcome to take screenshots of this. Just trying to keep everything organized. So then within the due diligence folder, I've got another one. Due diligence on the due diligence, due diligence on financials, due diligence on operating agreements. We break everything out even further. And this is just one folder within one folder within one folder of information, right? On a deal that we did back in, 2022, 2021, right? I mean, this is just all marketing information. We're trying to figure out what's going on in this market. It was the first deal that I bought in Chattanooga, and I don't like to not know a market, so we studied the hell out of it. All right, financing options in commercial real estate. I mean, you've got your traditional loans, right? Banks, credit unions, CMBS loans. I always work with local groups, right? Either they're local to Nashville or they're a regional bank. Local and regional lenders are by far the best people to be working with, just like brokers, right? Because they understand the market and they are itching to do these deals. There's a lot of alternative financing in commercial real estate. And that's the great thing about y'all, if you're moving from single family or multifamily into commercial, a lot of the principles that you already operate by are 100% translatable. You guys like negotiating seller financing, it works just as well in commercial real estate. You like negotiating for a seller carry in a second position, works just as well in commercial real estate. Debt and equity structuring strategies, there are infinite numbers of ways that you can structure the debt and equity on these deals. And it's important for you to go through that on the front end as you're putting these deals together because, I mean, one, you're gonna need to know that for closing, right? You've got to make sure that all the paperwork is properly in place. But 2, it's gonna completely determine how much cash flow the deal is gonna have or how much potential risk the deal is gonna have. Yes, you can do mezz debt. Yes, you could probably find somebody that's gonna allow you to put 5% down. Should you do it? Hell no, absolutely not, right? Like, there's a reason that banks require an 80-20 like minimum, especially with a 1.25 debt service coverage ratio right now. But banks are really good investors. They're really good partners. I mean, they are doing this all the time. There's a reason that they have some of those catch-alls in place, right? That's frustrated the hell out of me when I first got started, but now looking back, I'm like, yeah, it makes sense to have a 1.25 times debt service coverage ratio. So just make sure, and we can talk about creative structures and all that kind of stuff if you guys want to. And then loan due diligence, you gotta read the damn documents. And here's the trick. Every single bank will be like, oh, these are laser docs. We don't negotiate these. Yes, they do. They do negotiate them. Just make sure that you have a good commercial real estate attorney that actually knows how to negotiate these loan documents. Pay attention to prepayment penalties, especially today, right? Banks are probably gonna wanna lock you in on that simply because they know chances that interest rates go down considering how high they are today, pretty good. I don't know. I mean, I get confused. Every day I kind of flip-flop back and forth between interest rates might go down or they're probably going up. But you want to make sure that you're avoiding prepayment penalties if possible, simply because if rates drop 50 to 100 basis points in a single year, you want to be able to refinance that loan. That could significantly free up some cash flow. And then, of course, personal and non-recourse guarantees. That's one of the biggest differences that you will find in a commercial real estate loan as opposed to single-family and multifamily. In commercial real estate, on almost every single deal that you do, unless you're Warren Buffett, you're probably going to be signing a personal guarantee. Getting into the lease structures, commercial real estate has several different types of leases. It is not like the standardized forms you might get from the Realtors Association for your single family or multifamily deals, right? And I know that there's some operators that have their own, custom lease forms. Commercial real estate, there's really three. I mean, first off, there's no templated forms. There's no MLS, there's no templated forms, there's no standards in commercial real estate. It's the Wild West, man. Bring a shovel, we're searching for gold. There is no Fair Housing Act either, right? So, and we'll get into that, what that implies here in a little bit. But when it comes to the lease structures, there's three primary types of leases. You're gonna see variations of these all across the board. And I will caveat this with there's not anything at the top of every lease that says this is this type of lease. You have to actually read it and understand what it's saying, right? So you've got triple net, gross, or full service gross, and then modified gross, right? Full service gross, tenant pays one lump sum, landlord pays all of the expenses. So your tenant pays you $5,000 a month, you pay the taxes, you pay the insurance, you pay the utilities, you pay for the cleaning, you pay for the landscaping, whatever, right? Some landlords prefer that because it depends on the sophistication level of the tenants. Right? Sometimes it's just easier to tell a tenant, hey, rent's just $5,000 a month. Cool, sign me up. Modified gross is kind of the next step, right? And it's very similar to what you guys do in single and multifamily. So modified gross means tenant pays you one lump sum plus one or two other things, right? So modified gross could be they pay you base rent plus they pay their utilities. They pay you base rent plus their share of the common area maintenance, right? There's many different ways that you can structure it, just depending on how you kind of want to do it as a landlord. And then there's triple net, and that's the one that a lot of people, flock to commercial real estate for, which I think is funny. Everybody thinks it's an end-all be-all. It's not. I mean, it is, but it's not. Triple net basically just means that the tenant pays you base rent, and then they pay their pro rata share of the common area maintenance, property taxes, and building insurance, right? So it is the same, really, as a full-service gross lease. They're just separating out those two payments, right? They pay it all in one payment, but you get what I'm saying. The reason you actually denote them differently is because if property taxes go up in a triple net lease, the tenant pays for that. If your insurance goes up in a triple net lease, the tenant pays for that. Whereas in full service, you as the landlord would just have to absorb those costs. So very important to understand what kind of lease structures you're getting into. Check out the expiration dates and renewal clauses. I did, mention earlier, of course, look at the rent roll. Trust but verify. I mean, you'd be amazed at some of the stuff I get. I mean, like a 5-year-old drawing with crayons is a little more sophisticated sometimes. It's kind of amazing. And of course, rent escalations and expense pass-throughs. Commercial leases are typically 3 to 5 years. You might have 7 years. You might have 1 year. 1 year is just not as common. You might have 10 to 15 to 20, right? Rent escalations are incredibly important because if you're going to sign a 5-year lease, you don't want to get locked in to a base rent that's going to be severely under market in 5 years, right? Multifamily, you get to redo it every year. In commercial, we'll typically say, hey, there's a 3 to 5% increase every year. You want to make sure if you're buying something that has a tenant for the long term, that you're at least able to raise the rents on them every year, really to just keep up with CPI, which good luck doing that today. I don't care what asset class you're in.
By the way, if you're enjoying this content, I have a commercial real estate mastermind, the Siri Accelerator, with over 100 members where we do this stuff every week. So if you want to learn more about investing in commercial real estate, click that link below.
In commercial real estate, you get to do whatever you want with tenant financials. I get to make sure that you are the perfect fit for my commercial building. There's no Fair Housing Act. I don't have to worry about offending somebody or whatever. Typically what I ask for, because we're signing leases with businesses, right? This isn't a personal thing. 3 to 5 years of tax returns, generally 2 to 3, sometimes 3 to 5, depends. So let's call it 2 to 3 years of tax returns, a personal financial statement from anybody that owns 20% or more of that business, because they will be signing a personal guarantee on the lease, which helps me on my personal guarantee on the loan. And sometimes we'll ask for bank statements. It depends. I can ask for your mother's blood type. It doesn't matter. I can ask you for anything that I want so that I can get comfortable with leasing to you as a tenant. That's the great thing about commercial real estate. I know newer people jumping in kind of get a little bit worried. Well, I'm signing a 5-year lease. I'm paying brokerage commissions. I don't know anything about this tenant. You can financially vet them until the cows come home to make sure that you are comfortable doing this. What makes a tenant good? There's not really a metric. You'll kind of start to pick up on it, right? I had a tenant one time who at the end of she didn't really pass the 2 to 3 years of tax returns. So I got profit and loss statements, 12 months. At the end of every month, she had $0 because she was spending all of her profit on Uber Eats. It's like, this isn't gonna work. Nuts. So I wasn't comfortable with that. We have had some where it's like, okay, well, their business is actually negative cash flow. They are losing money every month. But the personal guarantees are so strong that their global cash flow, it's kind of like what a lender would do when they're looking at you to give you the loan. Their global cash flow, this is like a side business that somebody's starting up for their kid, whatever. But dad, sells Rolex watches to Saudi billionaires. Cool. He's got money. We'll have him sign a personal guarantee, right? So you can kind of, they don't have to necessarily be an actual owner of the business to be a personal guarantor. But do anything you can to get comfortable with it. That's the nice thing about that. Common area maintenance reconciliation. So common area maintenance, CAM, is one of the 3 triple nets. It's your expenses on the property. It could be anything from, lighting up the parking lots at night to sweeping them to, maintaining the bathrooms in the hallways and whatever, right? It's common area that you are having to maintain on behalf of all the tenants. All right, inspecting the property. Structural components, the roof, foundation of the walls. That is important no matter what type of lease structure that you have, unless the lease specifically states that the tenant is responsible for the roof, foundation, and the walls. Typically, the tenant is not going to be responsible for any of that kind of stuff, especially if there are 2 or more tenants. If you get into a situation where the tenants are actually responsible for the roof and somebody occupies 50%, the other person occupies 50%, the whole roof needs to be replaced, somebody says, well, my side's fine, it's just not worth it. So generally, landlord maintains the structural components. Of course, your HVAC, plumbing, and electrical systems. And then parking lot and ADA compliance. ADA is a big deal in commercial real estate if you're planning on pulling permits and doing any sort of work to the building. Most commercial buildings, if you're buying them, have been grandfathered in. They're already ADA code or they're grandfathered in. Unless you start pulling permits, and it depends on the municipality that you're operating within as to what that limit is. In Nashville, I think it's like if we do 20 or 30% of permit value of the total value of the property, right? So it's pretty low. Then you have to go back and do a bunch of ADA compliance. We talked about this a little bit earlier, but getting a team to do a property conditions assessment for you, if you just go Google PCA, commercial real estate, your town, you'll probably find somebody. I like to bring a roofer specifically. Commercial roofs are a different beast. Inspectors can catch a lot of things, but I also want the guy out there that I know I can trust that has replaced a bunch of these roofs for me, that's willing to actually say, hey, here's how much it's going to cost to fix the problems that you have. I need to know that on the front end. HVAC, I can typically deal with. I want to know that it's good, right? But I mean, generally there's nothing that's going to happen with HVAC that is so big that it causes a problem. Unlike plumbing. right? A lot of these commercial buildings have old cast iron piping that cannot be sleeved. And that can be a massive issue. When you're walking through a property, especially if you're with the seller's representative, point out all the issues. Make some up. I used to have to tell clients when we were walking through buildings, I was like, you hate this building. Like, I need you to keep that in mind as we're walking in here. I don't want you to say one positive thing about this, right? Because, I mean, we would walk in and somebody would be like, oh my gosh, this is perfect. And you'd be like, great, we're paying full price. Awesome, okay, that's what we're doing now. When you're going through the property, you want to pay attention. It's kind of the same things that you'll be inspecting on the multifamily side of things. Look at the foundations, make sure that there's no major cracks. That's always a big, big issue. Go look at the electrical boxes. You'd be amazed at how many commercial buildings are somehow still operating on an electrical box from like 1957. That's not up to fire code. And I promise you, the second you buy it, it will catch fire. It happens every time. So go look at those. Of course, inspect the HVAC units. I just like to see how old they are. Everybody says they last 12 to 15 years. Count on 10, maybe, if you're lucky. You want to talk about architect and engineer? We're kind of getting short on time, so I might need to run through this. I mean, this is really kind of only if you're going through development, right? We'll blitz through it. It's important for you, if you're going to buy any existing properties and you're buying it on a per square foot basis, get out there and verify that you're actually buying the square footage that you're getting. A survey will probably show this, but sometimes it's pretty good to get in there with an architect or a space planner and have them actually shoot the floor plan. One, it's going to help you on your marketing in the future, but two, it's going to help you actually understand what you're buying. I just found 3,700 square feet in my building, my 330,000 square foot shopping center that nobody knew about.
Congrats.
Thank you. I know, it's kind of nice. Like, that's, you think about it, it's 1% of the shopping center. Like, how easy is it to actually lose 1% square footage? But we're in one of our tenant spaces, and we're like, this doesn't really add up. You guys stop here, but the next tenant starts here, and there's no doors, there was nothing, like, we couldn't access it. So they had just covered it up with a wall at some point. So we found 3,700 square feet. You know, the amazing things you'll find. Tax records are also almost never right. I think it's laughable. At least they try. When it comes to the architectural and structural considerations, just make sure that you're code compliant. You'd also go through the feasibility of renovations or redevelopment. We almost bought a hotel a couple of years ago, and I went ahead and I was looking at the zoning. I was like, I think based on this zoning, it might have future potential. It was it was 124 units, I think, and it was on a certain zoning in Nashville where I knew the further back you got off the road, the taller that you could go. It's a very interesting zoning. And it was kind of T-shaped. So like we were right on, we had road access, but we were very far back. And we were doing it for an OZ, so we had 10-year capital. I was like, what could we do with this in 10 years? I had an architect do a study on it, and we could build 40 stories there. It was a little 2-story, hotel on several acres. That completely changes your exit plan if that becomes your pitch, right? So it's nice to know that ahead of time, because I don't want to go sign 10-year leases in year 7 if that's our potential exit, right? That's going to totally gum up whoever's coming in to buy it. They're just not going to pay as much for it. So MEP systems review, be amazed at how complicated mechanical systems can get. I had to have a guy, I'm building a 350-unit self-storage facility indoor in a building that I already own. And I had my HVAC guy come out, and he was like, do you have any mechanical plans? I was like, no, just give me, X amount of tons per square foot. He's making me sign a waiver that's okay because he's not doing it based off of plans. Those guys just won't do anything off of plans. And then of course, you can work with professionals to figure out future use or value add improvements. I like to work with brokers on the front end. What are the 17 different options that we have for this in the future? What happens if this happens? What happens if that happens? We do all sorts of contingency planning, and I'll actually do that and show that and reflect it in my underwriting. My underwriting makes the deals that I do look like shit. It really does. I beat the hell out of them. But I have to do that, and you have to do that. Because that is how, I've been buying and raising capital since 2019. We've had 0 capital calls ever. And I'm proud to be able to say that, but it's because I underwrite so conservatively that even in a time where most sponsors are having capital calls, we're fine. We're moving right along because I did it so conservatively it doesn't matter. Right? All right, settling legal issues. Reviewing title reports and title insurance. You guys want to fall asleep? Go read those. Get a really good title attorney. You're going to have a title attorney. You're going to have a commercial real estate attorney. You're probably going to have a corporate attorney. Makes you wish you got a law degree sometimes. They make so much money on these deals. But let them go through all of it. I've got a phenomenal attorney. She reviews everything. She sends me a bullet pointed list of whatever I need to pay attention to because she already knows what I like and what I don't like. And then we just move on. It makes it very easy for me because I don't have time to be digging into title reports. Easements, encroachments, and liens, you've got to make sure that if there's, I bought a property one time, I couldn't believe how many liens were on it. The guy didn't even do any work to it. He somehow still had a bunch of liens on it. Of course, he didn't tell me that. We go do the title search, and all of a sudden it's like, this guy's probably not walking away with any money on this deal. Everybody else is. You got to make sure that that kind of stuff pops up because what you don't want to have, and of course title insurance is going to cover you on this, but you don't want somebody coming back after the fact saying, actually, this property owes me X, I'm suing you, right? Title insurance will cover you on that. Dive into the local zoning and land use considerations. I like to, one, get a letter confirming that the site is zoned for what I believe it's zoned. Two, I like to go in and look at the future plans for whatever that city is, whatever that municipality is, right? So Nashville has like an actual Nashville Next plan. I can go in and look in these neighborhoods and see if I buy this property, the city is saying it sees it becoming high density multifamily at some point in the future, and today it's a single family home. Well, when I go to submit that for a rezoning, I get to show them, you said right here that this is exactly what you wanted. You can't deny it. They still will. They're probably going to lose that argument though, right? So it's a good thing to look into. Reps and warranties. I will not rep or warrant anything as a seller. I don't care. It's as is. Nothing will go past the closing date of this contract. I have buyers that will try to sneak in reps and, to be fair, I'm that buyer too. They will try and sneak reps and warranties into the contract, right? You're going to represent and warrant that, you know, this property has these leases with these tenants, with this type of income, with, you know, X, Y, and Z, whatever, right? Because it's basically an insurance policy to say, hey, if something pops up after the fact that is not as it was presented, I get to come back after you. As a seller, not a chance am I doing any of that. You do your due diligence, and I'll sell you the property. How about that? On the buyer side, though, I want all those reps and warranties. So, you know, it's kind of a tug of war. Usually the no reps and warranties wins out. Building contingencies as well on the financing, environmental, and structural finding side. I mean, I generally beef up my construction costs by about 10, 20%. No matter, like, I try to account for everything. Go ahead and add another 20. Something's going to happen. It doesn't matter how good you are at looking at these buildings, something is going to happen that you just couldn't see. Hire an attorney. Get a commercial real estate attorney. Don't work with a residential real estate attorney. Don't work with a title attorney. You're going to need a commercial real estate attorney that's actually going through all of this process with you, right? The great thing is an experienced one will handle a majority of this. All right, closing the deal. The nice thing about commercial real estate, when you show up at closing, they're going to hand you like 3 documents. You're going to be like, where's everything else? You're like, what are you talking about? Makes you realize that the majority of the documents that you're signing in a residential deal are just residential disclosures. There's so much of that, it's crazy. We show up and there's, you know, we're like signing a deed and basically loan documents. That's kind of it. So yeah, with that, if you guys want to scan that QR code, you can get my commercial real estate deal analysis toolkit. It's got my underwriting spreadsheet. I actually sell it for $200 on my website. A due diligence checklist that covers like all of the stuff that we just went into. That way you don't have to worry about it. A value add checklist, a closing cost checklist, and a commercial rent roll template. So yeah, get that. It'll help you out quite a bit.
All right, now that you understand how to actually go through the due diligence part of the process the right way, you need to make sure that you can actually run the numbers to verify that this is a good enough deal to go out there and raise capital from investors or get a bank loan. So watch this video next.